Hello and welcome to Car Dealer Live. My name is James Batchelor, and today on the show we are taking a look at the high-end vehicle finance market. And who's better to chat more about this than Darren Selig? Darren, welcome to the show.
Thank you for having me. It's a pleasure to be here.
Well, lovely to have you on. Now, just a bit of background before we get stuck in. Darren is the founder and chief commercial officer of JBR Capital, they are the UK's only independent finance provider dedicated purely to the high-end vehicle finance market. Darren, this part of the market, I mean, it always fascinates me. I mean, here at Car Dealer, we cover car dealers of every kind, but it's this part that really interests me. I can imagine it's been quite a colourful place to operate in the past 2 years with the pandemic. Is that right?
Oh, never a dull moment in the high-end vehicle finance market. And it's interesting how you describe it, because it is a sector that I sort of fell into 20 years ago. And it is colourful beyond colourful for a whole host of reasons. Never ever a dull day, and it is a sector that is very, very different from the volume consumer market. And but during the pandemic, that has been an interesting time in high-end vehicle finance and high-end vehicles. And one would imagine that a pandemic would come along, everyone would be like in absolute panic. Oh, my lights have gone off again. And
move your arms around more.
Be very flamboyant and make sure the lights go off. But anyway, yes, in the pandemic in high-end cars, one would think it would all come to a standstill. Everyone in panic. Is it the end of the world? What are we going to do? And that uncertainty sets in to buyers. And yes, indeed, in the first lockdown up to the end of June 2020, people did really stop buying and batten down the hatches. Lenders stopped lending. In fact, we stopped lending and did continue to stop lending for the following 9-10 months. But people stopped buying luxury cars up to the end of June, like in across all sectors. But then July, dealers started to open. It went absolutely ballistic. Went absolutely mad. It was like cars were going out of fashion. It was like it was the end of the world. And there's been absolute insatiable demand right across the board, which doesn't seem to have subsided at all at the moment. And those price rises of 30 to 40% that get reported in the press have crept into the luxury market as well. Those discounts that used to be available on, cars such as Cullinans and a lot of other cars, quite substantial discounts, they have all gone and disappeared. It's full list price, I'm afraid, if you want a new car, if you can get hold of one, because order now, you're not going to see it for at least 12 months if you're lucky. And that has, of course, exacerbated the demand into the used car market and forced those prices up. We hear a lot of talk about the global semiconductor crisis across during the pandemic period. And in fact, when you look at the luxury car sector, that doesn't really seem to have filtered in there. Porsche and other manufacturers reporting, record sales of luxury cars. Porsche was over 300,000 units globally, which was record for them. And that is very similar for all other manufacturers. So, the semiconductor crisis, yes, it's there. But it seems to me that manufacturers have been diverting those semiconductors into luxury cars where they can now make the margins, whereas beforehand there was a lot of discounting going on. So, so pandemic was, initial stop, and then it's been insatiable appetite ever since, exacerbated by stock shortages. And people carry on buying. We've not seen any drop off in proposal levels for finance since we restarted lending in March last year, 2021. It's been insane. But most customers in the luxury market are quite insane, to be honest.
Well, we'll talk a little bit about the supply chain in a second. I just want to pick up something about the pandemic. I mean, you said during the first pandemic, everyone sort of battened down the hatches and people weren't buying anything. Then when things started to open up, sort of summer 2020, is it a bit of a generalization to say people were splashing their cash a bit more thanks to, disposable income? There were fewer ways to spend it, and people thought, well, hey, I may as well buy myself a nice car, and life is short as well. Were they elements, do you think?
I think they were definitely elements, and when you talk to customers, those are the elements that they spoke about. Obviously, uncertainty always makes people generally stop and take stock, and no one really knew what the heck was going on. It's obviously 3 months sitting at home doing not a lot, really focused people's attentions about their immortality and life and the future. Fortunately for a lot of high net worth individuals and high earning individuals, their businesses did carry on, and actually a lot of them did flourish, more so than before, and high earning individuals still carried on earning, good money. Good for them. I know that was not the case for, a lot of other people who were in furlough and, suffering, certainly in the hospitality sectors and, transportation and airlines and travel, absolutely decimated. But, for those high net worth guys with their own businesses and entrepreneurs, they were using this as an opportunity to try and make even more money than what they were before. And once they became confident that their earning capacity was not diminishing and was not being impeded in the way that perhaps they may have envisaged at first, they just thought, right, great, well, I'm feeling confident again. I have to be flamboyant with the lights, and oh, don't you love podcasts? And they just thought, right, well, I'm feeling financially secure. Everything seems to be okay. I can't go on my 3 or 4 luxury holidays anytime soon. Nothing's really open. Can't really even go to nice restaurants. So I'm left with buying cars or anything I can find on Amazon. So they just suddenly went out and bought nice cars. And I think the mortality factor, did really bring it home for a lot of people, saying, well, I've been working so hard for 10, 20 years, always talking about in the future, I'd love to have that, iconic purchase of passion, of what I've always dreamt about. Maybe I should go and do this because I have no idea whether I'm going to be alive next year. And people really did go out and do that. And it's not the first time I've had calls like that from customers, actually. Normally their friends passed away. It's been a terrible tragedy in the family. It does make people think about it and say, what the hell? I'm just going to go out and do it. So yeah, people had money. They didn't have anything to spend it on, questioning their mortality. And let's just go and do it.
Yeah, definitely. Let's just talk a little bit about a topic that's very pertinent at the moment, and that's high interest rates. I mean, they are tipped to, they're tipped to hit the highest level in sort of 13 years this summer. I mean, yes. How do you think the luxury and supercar market, well, how do you think it's actually going to respond to this increase in interest rates?
Well, James, you look significantly younger than me, so lucky you. So perhaps you, like lots of people in this country, have never experienced a rate rise, which is quite astounding. And I've seen rates rise, come down, go back up again. And, you see these headlines, interest rates tipped to be the highest ever in the UK for 13 years, disaster looming, and you're talking about rates going from, was what, 0.1% or something, it's now 0.5%. Predicted by the Bank of England to rise to about 1.2% by the end of this year, and around 1.75 to 2% by the end of the following year, 2023. And and I go, yeah, that's not great compared to 0.1. However, back in 2006 and 7, just pre the global financial crisis, base rate was at 5.75%. So somewhere in the magnitude of 10 to 12 times where it is now. So will this affect car buyers and demand? And again, it comes back to that consumer, sentiment factor. How good am I feeling about my life and confident about my earnings? It will really come down to that. in terms of the interest rates themselves, all I can tell you is back in 2006, when base rates were 10, 12 times what they are today, the market was extremely buoyant. And base rates are at 5.75 back then. You're talking about customer interest rates of about 10 to 13% APR. I seem to remember what it being, and people just accepted, well, that's just what it is if I want to buy my car, and was the normal. So I don't think rates going up to 1.2% by the end of this year, 1.7% by the following year, is going to significantly impact in the luxury sector market. A lot of people in the luxury sector have seen it before. Where I think it may impact is at the lower, more volume consumer market. And the reason I say that is, obviously the earnings and the income is quite a lot less than at the luxury, what you'd expect for a customer in the luxury end of the market. And people at the lower end in the volume market are being squeezed from all directions, whether it's rising energy costs, rising inflation at over 5%, rising interest costs, and of course, used car prices going up 30 to 40%. So in relative terms at the volume end of the market, one would assume that's got to have an impact on consumer confidence and sentiment and how they're feeling. And at the lower end of the market, I think it will make people think twice, take stock, saying, it's just rising costs everywhere. My income isn't rising at the same kind of rate. Can I now afford this?
Yeah.
However, at the luxury end of the market, I think it will make very little difference. Yeah, they'll be. I'm in the dark again. This is dreadful. But will it make people in the luxury end of the market think about it? Yeah, of course. Customers even at the higher end are always rate conscious. They want a deal. They want the lowest rate. They want the best of everything. Will they question it? Yeah, of course they will. But they will adjust very quickly. I don't think it will. That extra 1% is not really going to detract someone from buying a car.
Yeah, definitely. I mean, of course, you guys have got to react to that as well, react to the increase in interest rates. I mean, what kind of solutions have you got to benefit, customers and dealers as well?
Yeah, so, interest rates are rising. That's like a negative statement to make to customers. Rates are going up. What I always say is, we are an independent lender. We're not a huge bank. We're here to provide exceptional service to our customers and to our introducers. We are specialists in a niche market. All that, we need to earn our margin and protect our margins so we can carry on providing exceptional levels of service and provide, finance to a sector that has been underserved for years and misunderstood for lots of reasons. So, unfortunately, we do say we do have to pass on those costs of rate rises to the customer, unfortunately, in the base rate, in order to ensure that good service continues. However, we're always looking at, innovative ways of, well, what can we do to assist customers in a rising market and give them something that we think is attractive. And one thing we've come up with is a variable rate product, which you think, well, why on earth would anyone take a variable rate product when interest rates are going up? Well, we have on our interest rate, on our variable rate product, we haven't put up the interest rate on the variable rate product, and we've removed early settlement penalties as well from that product for customers that return to us when they settle early. As I'm sure you'll know, in the luxury market, customers tend to settle their agreements and sell the cars at a much faster rate than in the volume market. In the volume market, it's mum and dad, I've got my car, family car, and I take my kids to school and back and everything. And it's a good, solid A to B car, and they'll keep it the 3 or 4 years on their PCP agreement, and they'll hand it back or change it during a normal replacement cycle. Not much passion in that. It's a very functional purchase. Our customers are buying cars, generally that no one actually needs. They're just very passionate, and they're just fantastic cars.
Yeah.
So the buying habits are very, very different, and they get bored of them pretty quickly. And typically, someone might take a 3 or 4 year agreement, but look to come out of it anywhere between 6 months and 22 months into the agreement, because they just don't like the colour, they're bored of it, fancy a change, their friend's got something better. Their wife told them to get rid of it and change it for something else, whatever the reason. And there's so many funny reasons. Honestly, we could be here all day just talking about the hilarities of those situations and why customers buy these cars. So they do have a propensity to change their car much quicker in that cycle. So if you're on a variable rate agreement, yes, rates are rising, possibly by another 1%, 0.75% this year. But if you're saving early settlement penalties of anywhere between 1.5% to 3% on your agreement, that's a massive saving. And it just, obviously, the benefit to us is our funding into the business is on variable as well. So it's kind of tracking, we're protecting our margin as the customer's rate is increasing, as our funding costs are increasing. The benefit to the customer is they can swap out any time with no penalty and go with something else. And actually, overall, we'll save money on that product, certainly over the next 12 to 24 months.
Mm. Okay. High interest rates. I mean, there's a possibility it could create a bit of a soft market, but I would imagine that with the supply chain issues we are facing at the moment, it's probably keeping customer confidence relatively high, isn't it? Is that a fair thing to say?
Yeah, I think the short supply into the market definitely is keeping confidence high, and the interest rates just aren't such a big feature in the wave my arm again, in the luxury market. And so yeah, I agree with you. I think it's going to be fine.
Yeah. And of course, the whole supply chain, I mean, it doesn't matter what kind of car you're talking about, the supply chain issues and the new car shortage is affecting the whole market. I mean, yes. Some optimistic people say it will be fixed this year. Others say it's going to be more like 2023 because it's the whole supply chain. Are you seeing customers preparing to wait for their new cars, or are many of them turning to the used market and they're perfectly happy to pay inflated prices?
In our market, customers are extremely impatient. They want everything yesterday. So no, they're not very patient. They're not really willing to wait for the new car to come through. So what they tend to do is order the new car and take a used car in the meantime, which they will swap out of when the new car arrives. So they're helping keep the market buoyant and keep prices high by buying into the used market in the intervening time, waiting for their new car to come through. They wouldn't just wait for the new car to come through. They would definitely be looking to swap into something else in the meantime. So yeah, but it's problematic. But I think for manufacturers and certainly for franchise dealer groups, it's a nice problem to have, because over the last decade, certainly in the groups, these groups, I don't feel all sorry and benevolent for them, but because they've always found ways to make money, but they have struggled to make money on the metal of the car itself, and they've had to create earning opportunities for themselves by bolting on all kinds of products and services around the customer and around the car, but yet not really making much money margin from the car. And I know some people will find that very surprising, but dealers historically haven't really made much money off cars at all. I mean, literally, sometimes nothing. And here we are in a situation where the supply has been constrained by the manufacturers, by so-called semiconductor crisis, cutting production during COVID and not ramping it back up, all to the benefit of actually the dealer groups and the manufacturers, because that has protected profits the first time in a decade. And look at all the results coming out from all the groups. They are absolutely eye-watering and astonishing. They're making very, very strong money from the metal, from the cars, for the first time in a decade. So and they've got out of that cycle, that horrible cycle of pre-registering X number of cars just to get volume bonuses from manufacturers, having to heavily discount those cars into the market, which affects the future values and residual values, that customers, the average man on the street is going to get on their car, and having to sell them out into leasing companies and contract hire companies. That's another interesting thing, because leasing and contract hire companies are really suffering because they can't get the supply. No one wants to supply them the cars. Car brokers, all that kind of stuff, in the same way, wondering, how they'll make their crust. So dealer groups are doing very, very well from the sale of cars. They're not having to get any discounts. There's no haggling over the prices. And in terms of finance, their finance penetration rates in a lot of the dealer groups has actually fallen. I think they're now in the mid 40s, whereas it used to be in the mid 50%. But they're not really too bothered, because they're, I think, charging reasonable interest rates, but they're making decent money from that. They're making money from the car itself. So the whole model has changed, and it needed to change. It really needed to change, because dealer groups were very, very dependent on finance and insurance income streams previously, and now they're less reliant on that, which actually seemed to coincide very nicely for them with the change in the rules regarding commission structures, and how it worked last January 2021, with the FCA coming out, banning discretionary commission models in the regulated consumer world. So there was a lot of talk in dealer groups, how on earth are we going to make money, because harder for us to make the kind of levels of finance commission with the changes in the regulation. Lo and behold, 2 months later, COVID comes along and solves the problem for them. So I don't think manufacturers or dealers are in any hurry to get back to the production levels that they were before. I think it suits them. And I think it also suits them as a nice leader into moving across to electric vehicles, and they're putting resource and money and their semiconductors into EVs and hybrids.
Well, I just want to finish on electric cars, because I always like to ask this question of people who work in your area here, because you've got really good insight into what customers like. So as we know, supercars aren't immune from turning to electric. Can your customers, can they still get excited about the future? And because we've had decades of wonderful combustion engine supercars, haven't we? So what are your thoughts on the future?
Well, I'm 53, so my views may be slightly tainted, but a bit of like an old dinosaur, like the fossil fuels. I think it is changing, for whatever reason. The market is changing, and it's going to EV by 2030 and etc. So there's a kind of in the high-end supercar world, there is a kind of reluctant acceptance that it's going that way, and that change to EV has also fueled, pardon the pun, the demand and purchasing in the luxury and supercar market, because people are saying, well, this is my last hurrah, basically. It's my last chance to get one of these, petrol or even hybrid cars, and tuck it away and keep it forever, because they're not going to make any more of them. And it's like the last of line, last opportunity. So people are buying into that story in a big way, which is also fueled the demand there. But yes, it's like everything, it's the same for everyone. It's going to go to EV. All luxury and supercar manufacturers are, got plans to move that way, and producing hybrids and then going fully electric. So it will come. Will the drive be a little bit more boring? I think it'll just be different. It's just, the petrol engine is what we've grown up on. So it's just what we're used to. I think it's very generational. I think the younger purchaser, the younger aspirational purchase into the luxury and supercar market, who's in their early 20s on the start of their careers and getting passionate about cars. I don't think they will see it in the same way as maybe someone of my generation will. I think they will embrace it for what it is, albeit they still like the older cars, and maybe they'll buy into those, tuck them away. There's various companies like Everati and Lunaz that are converting classics or anything you want into an electric vehicle, so you can still have the older supercar look or older type car look, but for to operate in the modern world and maybe have the best of both worlds. And I think the experience will just be different. I think it'll just be different. I've been into some of these electric cars, and the acceleration and the torque is just phenomenal. I had a Tesla for a few days. Tesla lent me to try out, and I had terrible backache. I was like, what on earth? I've got such backache. I don't get backache from cars, and it's because I was trying to drive it like an 18-year-old. I was like flooring the pedal. I was like going backwards, hammering on the brakes, and it goes into this reverse torque. And then I was like jumping around in the car like no one's business. So I think there's a lot of fun you can have in electric vehicles. It's just different. But luxury car manufacturers will produce electric cars, and people will carry on buying them. It'll just be a battery underneath instead of an engine in the front. So I don't think it will dampen demand over time. It will be different, but hey, we've got to go with it.
Yeah, no, I agree with you. I think it will be different because we've got used to the mark of a supercar having immense performance, whereas now, like you say, you can buy a Tesla Model 3 Performance and it can get to 60 in 3 seconds. So the performance element won't be the defining factor for a supercar. It'll be other things, won't it?
It'll be other things, and things will emerge that we haven't thought of. Okay, so the smell of the petrol and the noise. Those are big parts of the passion of cars that, as a young kid used to get you very excited. You're not quite the same when this car just coast past you and you don't barely notice it because it's silent. So I don't know how that's going to pan out, but I'm sure there'll be other exciting things that will emerge that we just don't know about yet, that will get us excited in different ways. I mean, my criticism today of manufacturers in the luxury EV space really is about luxury. I think the few EVs that are in our sector are pretty expensive for what you get. Pretty expensive. Taycan is 120 to 160,000 pounds. Tesla's 100 or thereabouts. Model 3 obviously half that price, but relatively speaking, still expensive. And just the interiors just seem a bit drab and not very exciting, and not it's not enough luxury in there for me yet for the luxury end of the sector. And I know that will change. We're still in the early adoption stage, so people buying into the EV sector now. Although it's starting to take off, you are pretty much buying into the R&D of these cars and as an early adopter. And I think as time moves on over the next 7 or 8 years, prices will come down, and money will be available to put into luxury. And I still can't quite get used to that screen. I like knobs and buttons and lights and stuff, and it's all a bit sparse and space age for me. But like I said, I think it's very generational. I know lots of people, they just think having the one screen and everything on there is fantastic.
Yeah, honestly, it is an absolutely fascinating time to be in our industry, isn't it? So much change coming. But
there is.
Yeah. But for today, that's all we have time for, Darren. But thanks so much for joining. It's been a pleasure chatting.
And to you too. Thank you for having me on your show.
Yeah, very welcome. So join us again on Car Dealer Live very soon. Thanks for watching, and bye-bye.